About some of these groups that you mentioned that were down so badly. Let's go into these ETFs. How about that retail ETFs? Because fundamentally, these retail stocks are awful.
Yes, the RTHs was like the Qs. They bounced first. They were weaker. They got to their 200-day, and now they look like they're prone for lower prices. These RTHs, remember we talked about this ascending channel. This was your exit. This was your ascending channel again. If you missed this, you had to get out here. And now we're coming into this 103.57. If this doesn't hold, you have about 102.50. And then these things could see 100 on this ETF if this 1250 level doesn't hold in the S&P and we continue lower.
And talk about the semis, man. they are just as awful as those retailers. Those semis can't seem to get anything done right now. They were hit pretty hard.
Yeah, if you look at this also, everything's starting to look the same. They're coming under massive pressure. You had your exit when the upper area broke. You had a retest, another little area to give you this engulfing day to get out. And now we're coming into key support. This is your first pivot around 32.79, and then there's a very big level in this 32.40 area. If this doesn't hold, you could see even 31 here. So you have to map out big support and then almost what happens if we just accelerate to the downside.
The one I do like that's going down is oil. So let's go about those OIHs.
Well, OIHs have been trying to hold up them as this as well, controlled by this descending channel. I feel like a broken record, and if you hold below a descending channel, it's not good. Just broke this recent pivot, and now it's going to be coming in to test this 140 area. We'll see if this 140 area can hold for some type of action.
Now, the transports were acting a little better than the retail, but still, again, like you said, we're kind of repeating ourselves here. Let's talk about the transports.
Well, I'm not even going to put the chart up. It's the same story here. These things are either getting to their 200 days or they're breaking their 200 days, and that's a very unhealthy environment. So that's an environment where you really have to do less and hopefully be in a lot of cash and looking for bigger areas where maybe we start to hold.
All right, well, the financials, we've heard from so many traders that say the financials have got to rally in order to take this rally, to get this market to recover. We have not seen that. That financial sector, it's weak. It's down 2%. In fact, some people are saying we're starting to get to that oversold spot, but I'm not sure we're quite there yet, right?
I feel like these financials have been oversold for a year and they still just don't rally. I think the world is starting to look at them a little closer because they want to really use that now as a barometer for the economy. Is the economy going into a double-dip recession? Is business getting better? And as long as these financials keep going lower, they're going to perceive that as a no. So what we want to see is when these indices keep correcting, we want to finally see some relative strength in the financials. If that were the case, then maybe they could help lead us once this correction is finished, probably at some point much later this summer. So it's worth watching them. They're starting to get really beat up and hitting these lower prices. I would say just keep watching them. Don't start buying them yet and have those levels down just in case we start to see that turn. But it's not going to probably be today.